Crunch. ES Ranganathan, MD at Indraprastha Gas, joins us on the show right now. Mr. Ranganathan, morning. Another quarter of a double-digit volume growth for you. Tell us what the key drivers were for the push from higher taxi and car conversions, besides the government thrust of public transport and clean fuel.
Actually, the growth has happened 12% in CNG, mainly due to conversion of goods vehicles and also taxis, because we have added more than 59 stations in the last 1 year. So that has improved the availability and people have started converting. In the industrial sector, again, the ban on petcoke and FO has resulted in a lot of customers switching from the polluting fuel to gas.
Okay. In the PNG segment, industrial as well as commercial volumes were up a good 17% on a year-on-year basis. Given the recent ban on petcoke and furnace oil, this turned out to be the highlight for the earnings beat in first quarter as well. Help us understand what's the revenue mix between CNG and PNG now, and the kind of growth that is expected in both through the year after a strong start to the fiscal.
The revenue mix is about the same. You see, we have 75% revenue coming in from CNG, and domestic PNG is 7%, the rest is industrial commercial.
Okay, your Q1 spread stood at about 6 rupees per SCM. Given the kind of benign gas prices we're seeing, the depreciating rupee, where do you see spreads ranging over the next couple of quarters?
Yeah, if the rupee doesn't depreciate too much, we will be near about this for the next 2 quarters.
Haryana City Gas hearings are still going on as well. Valuations have not been finalized. That's going to be an important one for you. How are you preparing, and when is the outcome expected?
The valuation is with the Supreme Court. The hearing is expected on 26th of August. We hope to that it will be concluded, say, this way or that way before in another 1 or 2 months maximum. And that will add one GA with great growth potential for IGL, and it will be positive for the investors.
Right. So based on a recent geographical area that you've added to your network, what kind of material contribution are you penciling from them over the next couple of years? And also, any key additions that you're expecting in the coming quarters?
Yeah, we are putting up more than 60 stations this year also. So it is in existing area as well as in the new area. And the CNG growth will mainly be driven from our existing area only. But Rewari and Muzaffarnagar hold some hope for more increase than if you compare Karnal and Kaithal.
Okay. Help us understand what the capex plans would be for FY20 to 21, and how is it that it will be spread between the widening pipeline infrastructure and expanding your retail distribution network?
Yeah, we have a plan of more than 1,000 crore for this year, out of which around 600 crore we will be putting up in the existing area, and 50 to 100 crore in new areas of Ajmer, Kanpur, Kaithal and Gurgaon. So total there will be addition of more than 60 CNG stations and around 100 kilometers of steel pipeline and 1,200 kilometers of MDPE pipeline.
Okay. Recently, a concept paper was released by the PNGRB to allow new players in existing geographies, given high entry barriers and concerns, of course, on allocations of subsidized APM gas. Now, your assessment of this, any areas that you feel are lacking clarity and are a potential threat to IGL's earnings growth if this is implemented despite your strong moat?
Yeah, we have actually conveyed our comments on that to PNGRB. Our considered opinion is that the market is not yet matured enough to bring in such type of competition, because if you allow some competition, most of the ground rules are not yet finalized. There is no clarity on whether they will also get APM price for CNG, or they will be only marketing the freely traded RLNG. So such type of things are not yet finalized. So the time is not ripe for opening up such markets. That's what we have told them also. We expect that it will not be implemented immediately.
All right. Thanks for joining us then and taking us through earnings this time around.